It seems like everyone is just sitting around waiting for the housing market to crash. But what if the crash is already happening? Just not in the way any of us expected. The real story, well, it's been hiding in plain sight the whole time.
So, be honest. Are you one of the millions of people just glued to the news waiting for another 2008-style housing implosion? You're not alone for sure. It's kind of the question on everyone's mind, right?
All right, so let's get right into it. The bad news isn't that the market is going to crash. The real bad news is that it isn't. Yeah, you heard me right. The crisis we're actually in is a totally different kind of monster.
And here's the best way to think about it. A great analogy, actually. This isn't a sudden explosion. It's more like that old story of the frog in boiling water. The heat's being turned up so slowly we barely notice. It's this slow, grinding paralysis that's fundamentally changing what it means to build middle-class wealth in this country. Okay, so let's break it down with another comparison. Think of it like a heart attack versus a chronic disease. 2008, that was a full-blown heart attack. We had reckless ninja loans, no income, no job, or assets. Homeowners had almost no skin in the game. But today, it's a completely different story. It's more like a chronic decay. Lending standards are super strict, homeowners are sitting on a mountain of equity, and instead of a glut of houses, we have a massive structural shortage.
And if you need proof, just look at this number. It's kind of staggering. More than half of all mortgaged homes in the US have over 50% equity. That's huge. Remember 2008? People were underwater on their loans, and it made sense to just mail the keys to the bank. Today, homeowners have way too much to lose. A big wave of defaults like we saw back then, it's not in the cards.
So, okay, if it's not going to be a spectacular crash, then what the heck is it? What we're seeing is something new. A deep, persistent market paralysis, a total gridlock. Let's call it the Great Housing Stagnation.
And this whole stagnation thing, it's really propped up by three big pillars. First, you've got this insane affordability crisis. Second, a really weird supply paradox. And third, what we're calling fractured demand. Let's tackle these one by one.
All right, first up, the big one, affordability. And honestly, the numbers here are just painful to look at. For about 75% of all households in the US, buying a median-priced home is, well, it's mathematically impossible. We're talking about 100 million households completely, totally priced out of the market.
And what this has done is it's basically split the country into two housing realities. You've got the haves. These are the folks who locked in those crazy low mortgage rates, below 6%. They're pretty much insulated from all this chaos. Then you've got the have-nots, and that's pretty much everyone else. First-time buyers, renters, anyone who needs to move. They are getting hit with the full force of today's high rates, and the financial strain it's immense.
And that brings us right to pillar number 2, the supply paradox. It's so weird because you'd think with prices so high, everyone would be selling, right? Nope, not at all. It's something called the lock-in effect. Think about it. Over 80% of homeowners have a mortgage rate way under what you can get today. Would you sell your house and give up a 3% mortgage just to buy a new one at 7%? No way. You'd have to be crazy or desperate. And that simple fact is keeping millions of existing homes locked off the market.
So you're probably thinking, okay, fine. If people won't sell, why don't we just build more houses? Well, if only it were that simple. New construction is actually slowing down to 5-year lows. Builders are getting slammed by a perfect storm. Material costs are up, there aren't enough workers to go around, and frankly, their confidence has just tanked. We simply cannot build our way out of this right now.
So you've got this tiny pool of available homes, and the demand side has turned into this ferocious battle. It's basically a three-way fight. First, you have cash-rich boomers who don't even care about high mortgage rates. Then you have investors, both big and small, scooping up properties to turn them into rentals. And finally, you have first-time buyers, and their share of the market has plummeted to historic lows. They're just getting completely outgunned.
Okay, so let's recap. We have a stagnant, gridlocked, and brutally unaffordable market. It's a crisis in slow motion. But here's the thing about this kind of paralysis. It's not stable. The pressure is building up under the surface, and we're starting to see some pretty big cracks appear, and they're not where you might think.
And that first major crack? It's not in the house you live in. It's in the office building downtown. Commercial real estate is in serious trouble. The rate of loans going into special servicing, which is basically the ICU for loans, has hit a 25-year high. That is a massive red flag.
And this is all coming to a head right now.
There is a massive wall of debt. We're talking almost $1 trillion in commercial real estate loans that has to be refinanced this year. And they have to do it at today's much, much higher interest rates. If we see widespread defaults, it could absolutely cripple the regional banks that hold all these loans, and that could trigger a credit crunch that affects the entire economy.
So all of this, it forces us to ask a much bigger, more fundamental question about our society. For generations, homeownership has been the bedrock promise, right? It was the main road to building wealth and finding financial security in the middle class.
But what happens now? With younger generations being systematically priced out, outcompeted, and just locked out of the whole system? We have to ask the tough question. Is that road now permanently closed for good?
Because it really feels like we're heading towards a new normal, a world where owning a home, an asset you build equity in, is a thing of the past. Instead, housing just becomes another subscription service, just another monthly charge that drains your bank account, right there between Netflix and Spotify.
You can actually find the original source for this whole analysis in the description below if you want to go deeper. And hey, if you got something out of this, please follow, like, and share the podcast, What Bitcoin Taught Me. We're on Twitter/X, Nostr, Blue Sky, Threads, Instagram, Facebook, LinkedIn, Spotify, and now right here on YouTube. Thanks for tuning in.